Family Bank Stock Analysis. Is the new listing at the Nairobi Securities Exchange worth buying or not? Is what I want us to look at extensively in this video. So grab your notebook and your pen because we are about to have an interesting analysis today. And just as a starting point, the Family Bank stock was listed at the NSE on 23rd of June 2026. That is almost 2 months ago, okay? And we are talking about 1.66 billion Family Bank shares were listed at 18 shillings per share, giving the bank an initial valuation of 29.9 billion Kenya shillings. But here's the big question. Was Family Bank listed cheaply, or investors are paying too much for a bank that still has some weaknesses? Let's look at that objectively, looking at growth, profitability, dividends, valuation, and risks associated with Family Bank stock and the underlying business. In case you are new here, you are very much welcome to my channel. My name is Afagza Sifuna. I am a finance expert and qualified accountant, bringing you amazing videos about investing and making money each and every day. In case you like those topics, consider subscribing to this channel. Down there is a button called subscribe. Subscribe, and also I'll still add it, drop a like on this video. Having said that, as a starting point, if you are buying the stock of Family Bank, what exactly are you buying? Please remember, I always say, when you are investing or buying any stock, buy the business. It goes beyond that ticker symbol which you see at the NSE. So when you are buying the stock of Family Bank, first and foremost, the underlying business, Family Bank, is a bank which was established in 1984, and it is a Tier 2 bank in Kenya. It serves more than 1.3 million customers in Kenya with 95 branches across 32 counties. That tells you it has quite a huge or wide reach within the country. And Family Bank has total assets of 208 billion Kenya shillings as of close of 2025. And the customer deposits are typically upwards of 151 billion Kenya shillings. And of course, net loans also exceed 100 billion Kenya shillings. So this isn't just a small bank, right? It is an established bank, even though it is Tier 2. And so when you are buying the stocks of this bank, you are buying stocks of a formidable business, as you are about to see. And what exactly is Family Bank's investment thesis? Family Bank is appealing on different fronts. The first angle through which Family Bank is appealing is strong growth, okay? And just looking at the numbers of profit after tax for the most recent 3 years, I'm talking about 2023-2025. 2023 it was 2.5 billion. 2024 it was 3.4 billion. And then 2025 it was 5.3 billion. That tells you the profit after tax of Family Bank has been increasing year on year, which is amazing. Even just in 2025 alone, the bank saw an increase in profit upwards of 50%. Okay? And beyond profit, also profitability is increasing, right? From different angles. Case in point, when you look at, for example, the net interest, okay, margin, we are talking about it increasing from 7.6% to 8.6%. Looking at the return on equity, simply put, how the company is utilizing shareholders' investment to be able to generate an income. The return on equity also increased from 15.5% to 16.5%. And cost to income ratio did decrease from 74% to 69.4%, which basically means the bank was more efficient in utilizing less resources for them to be able to generate income. That tells you on profitability front, the bank is also doing some amazing things. And then when you look at the dividends, the bank is also doing amazing numbers on dividends because dividends have also increased over the past 3 years. Case in point, the dividend in 2023 was 56 cents or 0.56 Kenya shillings. 2024, it was 0.85 Kenya shillings. And then 2025, the dividend was 1.20 Kenya shillings. That tells you dividends have been increasing. And even looking at the number of 2025, the dividend yield was 6.7%, which is a decent yield compared to peers listed at the NSE. Okay? The biggest magic and the biggest of potentials with Family Bank is going to lie in something which is going to be called re-rating, right? And I'm saying so because Family Bank could potentially command a higher valuation if it continues to grow on profit, improve return on equity, and also reduce its credit losses. Therefore, the listing on NSE also gives the bank a greater visibility for it to access wider investment base, and I'm very positive after some time, re-rating is bound to happen and the bank is going to be in much better standing. Let's spend a little more time to look at the financials for you to really understand the financial health of Family Bank. As I mentioned, total assets of Family Bank have been increasing, right? In 2025, the total assets were 208 billion Kenya shillings. 2024, they were 168 billion Kenya shillings, and 2023, they were 142 billion Kenya shillings. That tells you the assets have been growing steadily. Therefore, it has a strong balance sheet when it comes to growth. When you look at the loans also by the bank have been growing because in 2025, the loans were 105 billion Kenya shillings. 2024, they were 92 billion Kenya shillings. And 2023, they were 87 billion Kenya shillings. That tells you they have also been growing consistently with a jump of 14% in 2025. Okay? And then when you look at revenue, also the revenue of the bank has been growing, right? In 2025, the revenue was 20.2 billion Kenya shillings. 2024, it had been 15.0 billion Kenya shillings. And 2023, it had been 13.3 billion Kenya shillings. That tells you the revenue jumped from 13 billion in 2023 to upwards of 20 billion in 2025. That there is growth on revenue. And in the same breath, profit has also been growing because looking at profit after tax, the profit after tax also did increase over those 3 years. 2023, it was 2.5. 2024, 3.4 billion. 2025, 5.3 billion. That tells you profit has been growing. And tied to that too, earnings per share have also been increasing because earnings per share is one of the key metrics which investors out there look at for them to really understand and appreciate if the management is going to be able to create wealth for shareholders. And the EPS has grown from 1.95 Kenya shillings in 2023 to 2.65 in 2024 and then 3.93 in 2025, right? Therefore, based on this, Family Bank's growth numbers are very strong, right? They're not growth numbers of a new company. They are very strong because the numbers have been growing across all those fronts. And then, when you take a look at profitability ratios and some of the quality ratios, right? Return on equity of Family Bank has grown from 15.5% in 2024, and then it jumped to 16.5% in 2025, which, by the way, it is a good, right? It is a good growth. It's respectable, of course, but it is quite below compared to the banking sector, which is typically at 19%. But all said and done, any ROE upwards of 15% is considered respectful and good. So Family Bank is doing something good, and we hope the ROE is going to continue growing. When you take a look at, for example, cost to income, right? The cost to income ratio did improve from 74% to 69.4%. Guys, that improvement is well noted because it means the bank utilized less resources to be able to generate an income. But then again, there's a caveat to this. This is one of the areas where the bank is not doing very well. And I'm saying so because a healthy cost to income should ideally be under 50%, right? And for those very top tier banks, they normally aim for under 40%. So seeing Family Bank's cost to income standing at 69.4% is a commendable reduction on that end, but then the bank needs to do much, much better, okay? And then when it comes to the net interest margin or NIM, net interest margin did increase from 7.6% to 8.6%. And this was, of course, supported by a strong growth on interest income, which is a good thing. Now, having shared what is good and the growth which looks positive, what is the biggest risk with Family Bank? Okay? The biggest risk with Family Bank is on something relating to quality, simply put, credit risk. And I'm saying so because When you look at Family Bank has significant exposure to MSMEs, right? Medium, small enterprises, which account for about 61% of its loan books. But then again, Family Bank's loan defaults, right, have been quite on the upward trend, because when you look at the NPL in 2023, right, the NPL on non-performing loans at the bank was 13.9%. In 2024, they were 14.3%. And then the NPL of 2025 was 14.8%. Guys, that is very risky, because it means non-performing loans at Family Bank have been increasing. A healthy NPL in the banking sector, the bank should be aiming to have NPL of under 3%. So seeing the numbers of Family Bank increase and standing at almost 15% is something to be concerned, because this is one of the metrics which investors need to have an eye on, because if non-performing loans continue to increase, it's going to mean the bank is going to continue being in a losing position. So hopefully, Family Bank is able to fix this so that investors are able to have confidence that the NPL is coming under control and hopefully inching towards the ideal under 3%. Having said that, when you look at the valuation of the bank, how is the bank performing when it comes to valuation? Guys, as I mentioned, on 23rd of July, the listing of Family Bank shares at the NSE was 18 shillings per share. Okay? And when you look at the different ratios, right, there are different things which different ratios tell us when it comes to valuation. Okay? Case in point, at that particular price, it traded at roughly 0.86 to about 0.92 times its book value. Okay? Which means investors were buying the stock below its reported net asset value, which is an amazing thing, because it meant they were buying this stock at a position which is undervalued. Simply put, it was under 1. Okay? And even some valuation matrices out there at the point of listing did estimate the true value of Family Bank stock was 29 shillings or thereabout. And that is reflective right now, because we are talking about the Family Bank shares right now trading at 31 shillings at the NSE. But then again, we shouldn't just conclude that the Family Bank shares are cheap. And I'm saying so because, as you've seen, just in under 2 months, the shares have increased in value by over 50%. And also the valuation matrices at the point of listing show that the stock is potentially undervalued with a very strong growth potential. So this tells us it could be a good buy. More so, the book value of Family Bank is bound to continue increasing in value. So if the stock is not increasing in price at par, chances are it's going to be a good entry for someone to continue buying the stock of Family Bank. But there is a caveat to it, as you're going to see at the end of this video. So what could make the price of the stock go higher? Of course, high profitability and also better metrics, like for example, high return on equity, lower non-performing loans, balance sheet growth, and then greater investors' visibility, because also the stocks are shaped by perception in the market. And then when it comes to key risks, which Family Bank as a business is exposed to, number one is credit risk, because I've spoken about the non-performing loans. That's the biggest risk which the bank needs to address. Secondly, the MSMEs exposure, right? It needs to have kind of like a balance and find a way of supporting MSMEs, even in the situations where the economy is getting tough by the day. Then third, competition. Of course, the bank is facing higher competition from other competitors, which are tier 1 banks. And then the fourth also is liquidity. You know, as a new listing, by introduction, trading volumes may initially be lower than established NSE counters. So this is something which Family Bank might bump into, which is liquidity challenge. But hopefully all this the bank is able to address. So having spoken about all that, will I buy Family Bank stock? My verdict is that yes, Family Bank is a good buy, but at the right price. And I'm saying so because this one is an interesting stock, because the bank has very strong profitability, growing loans and deposits, improving profitability across different areas, a growing dividends, and potentially even future valuation and relating happening. Of course, the three things I'd like to see: the bank continue being on or even fixing its profit growth to continue, ROE to move higher, and then NPL to start coming down substantially. Because remember, I had indicated non-performing loans need to be at least range of 3% or below. So it being at upwards of 14% is something which is quite disturbing. but hopefully Family Bank is going to be able to fix that. Now where you are sitting, will you buy the stock of Family Bank? Comment down below, let's continue discussing. Cheers guys, and you all stay safe.